Happy New Year and welcome to this market and economic update. In this video, we will review the biggest events of 2025 and explain what they can mean for your investments going forward. Last year brought strong results for investors. Many different types of investments did well, even though there was a lot of uncertainty throughout the year. What is the main takeaway? Sticking to your plan and keeping your eye on long-term goals is still the best way to handle the market's ups and downs. Let's begin by reviewing how different investments performed in 2025. U.S. stocks had a great year. The S&P 500, which tracks 500 large U.S. companies, went up 17.9% when you include dividends. It also hit 39 new record highs as shown in the chart. Bonds, which are loans to companies or governments, also did well. A major bond index went up 7.3%, which was the best performance since 2020. International markets, meaning stocks from other countries, were top performers. Both developed markets like Europe and Japan, and emerging markets like China and India gained over 30% when measured in US dollars. Now, these strong results were helped by the US dollar becoming about 9% weaker during the year. Other investments also saw large changes. Gold went up 64%, while Bitcoin went through big swings, ending down about 6.5% after reaching peaks above 125,000 from back in October. Now let's talk about the major events that affected markets in 2025. Many of last year's developments were things investors knew could happen, even though we did not know exactly how they would turn out. This is important because being ready for possible events can help investors stay calm when changes occur. Tariffs, which are fees on goods coming from other countries, were a big concern. When President Trump announced major tariffs on April 2nd, markets dropped quickly. However, when he announced the 90-day pause, markets bounced back fast. This shows how markets can adjust once the uncertainty clears up. Other events involving AI technology, Federal Reserve decisions about interest rates, government spending plans, and more all created uncertainty and caused market swings. Three key lessons stand out from last year's events. First, artificial intelligence continued to have a growing impact on the markets. The Magnificent Seven stocks, which are 7 large technology companies, now make up about 1/3 of the S&P 500's total value. This means most investors own a significant amount of these companies in their portfolio, whether or not they know it. Second, tariff policy created worry but had less impact on the economy than many people expected. Companies adjusted, policies were changed, and people kept spending money. This shows that policy changes do not always affect the economy or markets in obvious or immediate ways. Thirdly, owning different types of investments proved to be a smart approach. International stocks did better than U.S. markets, bonds had strong returns, and gold had a record-breaking year. The main point is this: 2025 shows us why it's important to stick with your investment plan. I hope you found these insights helpful. If you'd like to learn more about any of these topics, please do not hesitate to reach out to myself or to my team. Thank you.